I did a video yesterday on the best AI stocks that I felt were available for us to invest in. And I did it based on three criteria. One, what is their PE ratio? Number two, what are their projected earnings in the future? And number three, what is their PEG ratio? And that's the important element, because what the PEG ratio tells you is how much of that growth that is projected in the future is already in the current price, and thus maybe even making it an overpriced stock, as opposed to which are the stocks where that growth is not yet in the price, thus making it an undervalued stock. So what I did was create a spreadsheet, and I expanded it over the last evening to include more stocks. What I did was I went to ChatGPT and says, tell me the AI stocks who have the lowest PEG ratio currently on the market. And that gave me some other stocks to look at from those that I've been following in the past. And I came up with some interesting information. And then what I thought, well, I need to explain this in a written format so that my people who are part of my gold platform can understand it. And so what I'm going to do is put it on my website on the gold platform adjacent to my cheat sheet, and you'll be able to click on it and print your copy of this document here that I'm going to show you. Here it is. What you see here is alphabetically, I think it's some 50 stocks that I believe are going to be potentially the key players in the AI revolution. Now, what's important is, particularly if you're a new investor, which ones do you want to invest in right now and hold until January of 2028? And which ones you don't? Because some of them already have their growth in their price. Thus, they are properly valued, or maybe even overvalued for what they're going to be selling for on January the 1st of 2028. Let me show you exactly what I did. The first column is their average growth rate of their earnings over the next 3 years. So it says 3-year earning per share average growth. And you see ALS has an average growth of 7.7% over the next year. And you see that ACMR has a 20% average growth year by year. 20, so it would be, over the 3 years, it would project a 60%, so the 20.2 represents the average. Then what it says, what is its on the far right, what's its PE ratio? And its PE ratio is 8.49, and then its PEG ratio. And what I'm doing is dividing the 20.2 into the 8.49, and I come up with a PEG ratio of 0.42. That means it's underpriced. Okay, based on the 20% growth projections, whereas ACLS is overpriced because I've divided the 7.7 into the 12.6, and I come up with 1.4, so, or 1.64. So that says that the price is roughly 64% above the projected earnings. Now, you can go down here and you can see some have some outstanding earnings. And the numbers on the side, on the left hand, are my 10 best picks based on this number. So we come and Skywater Technologies this is actually Skywater Foundries, is projecting an average growth year over year for the next 3 years, an average growth of 135%. And its PE ratio currently is 24.56. So its PEG ratio is 1.18, meaning it's grossly underpriced. Now, on the other hand, let's find one that is grossly overpriced. And those are the numbers on the right-hand side. And you can see that Snowflake is my number one overpriced stock. And that is saying it's going to grow at 24.5% average per year. And that's good. That's excellent. But its PE ratio is, let's let's see, is 249. So I divide the 24 into 249, and it's saying its PEG ratio is 10.2. So it's 10 times what is justified based on the projected growth. So that is a stock you'll want to stay away from. What's number two? I'm sorry to tell you, but that's Tesla, because Tesla is projected to grow their earnings to grow over the next 3 years at 8.2%, and their PE ratio is 139.26. That gives them a PEG ratio of 16.9. So you are paying 16 times more than what the stock is, the price is justified. Now, that is mathematics. That is business, okay? That has nothing to do with FOMO. Fear of being left out. There's a bunch of people who think Tesla is going to skyrocket because of all the things they've got going on. But what you don't know is, where is that going to fit into the price of the Tesla stock? I don't know. But what I'm telling you is, based on mathematics and metrics, business metrics, it's overpriced. So let's go back to those that are properly. What's number two? Micron Technology. It is projected to grow at an average of 52% earnings per year over the next 3 years, and it has a current PE ratio of 10.97. So that gives it a PEG ratio of 0.21. So that is telling me, at a 0.21, its price is 20% of what it should be. So it has a potential growth. I know this is deep, but this is what stock analysis is all about. This is what a high-paid Wall Street analyst would do to evaluate stocks if I was paying them, okay? So what I want is you to understand this, and and then help you make better decisions. Look at what I feel are the opportunities to buy good stocks who are going to grow based on their financials, what their projected earnings are relative to their current price, and what you can expect on January the 1st, 2028. Again, I have written out in detail an explanation of how the analysis works, what the key metrics are, and the 3-year earnings, and the purpose of the chart. Okay? If you'll go to bestofusinvestors.com and sign up for the gold platform, you'll find this listed, that you can click on it, download this document right here, and you can then study it and make hopefully some better decisions. This is just a small part of my cheat sheet. My cheat sheet will change as we add new stocks. There are several that I'm going to add, such as Uber. Uber is my number 3 stocks. Twilio, which is the number 8, which I wasn't, and Square, which is my number 4 pick. Now, they weren't in my portfolio. They will be within the next week, as I sell some that I'm going to take, like Apple. I'm going to take profits out of Apple because it is overpriced right now, okay, based on this analysis. And this analysis is only as good as the analyst, okay? And that's me. So take a look at it. Come to the website, 14-day free trial. You'll have access to the link. You'll print this. You'll study it. And you'll make a decision. Does he know what he's talking about, or doesn't he? If he does, maybe I ought to pay him $19.95 a month for whatever he comes up with next to help me make better investment decisions. That's you I'm talking about. Okay? This is what I do for fun. I try to make sense out of a very complicated stock market. To my way of thinking, I want to buy stocks. I want to buy ownership in companies who are going to make money. Now, some companies because of market conditions, and that's FOMO in a lot of cases, a lot of you do not know anything about SKYT, but you own Tesla or you own Palantir. But you don't know what SKYT is, and you don't know what's my number two, anything about Micron. Why is Micron a buy? Because they make memory chips, okay? And they're the best at it, and their price is depressed, and they're going to make big buku money in the next 3 years. So get this, study it, and if I can help you any further, let me know. Show up at our Friday Stock Talk if you got questions, and I can help you understand these things better. I'm Kerry Grinkmeyer. I'm a retired financial advisor. My objective is teach the world how to invest. Now, I may be a lunatic, but I just might be the lunatic you've been looking for.